Good day, Dr. Wei and my fellow friends. My name is Chong Wai Kee and my matrix number is 270123 and I'm from BWRR3073 Credit Risk Management Group A. And the topic that I want to present is a study of credit risk and its determinants in Bank of Montreal in Canada from 2015 to 2019. The overview of Bank of Montreal. Bank of Montreal is founded in 1817 in Canada, and it is a multinational investment bank and financial service company. Bank of Montreal is one of the big 5 banks in Canada. Its vision is focusing on building investing and transforming the world to drive performance and growing the good. And based on the study, the problem statement is credit risk. Credit risk refers to the risk of a counterparty failing to perform its obligation, which means that the debtors fail to pay back their debt to the borrower. And Bank of Montreal faced an unstable credit performance from 2015 to 2019 because, based on the balance sheet of the Bank of Montreal, there was an obvious rise and fall of cash and debt in these few years. So it shows that BMO had a problem in managing the current assets and current liabilities and remained unstable in the past 5 years. And if the credit risk is not managed well, BMO will be unable to meet its obligation to pay back their debt in future. So credit risk is the main problem of Bank of Montreal. And this study is aimed to investigate the factors that will influence the credit risk of Bank of Montreal. And the research objectives are to study the impact of credit risk towards internal factors, to study the impact of credit risk towards external factors, and to study the impact of credit risk towards the internal factors and external factors. And the research question is, do internal factors influence the credit risk of Bank of Montreal? Do external factors influence the credit risk of Bank of Montreal? And does both internal factors and external factors influence the credit risk of Bank of Montreal? And methodology. In this study, I used secondary data collected from the annual report of Bank of Montreal from year 2015 to 2019, and the financial statement consisting of income statement and balance sheet was reviewed in order to collect the relevant data for the analysis. SPSS has been used to provide data analysis between the independent and dependent variables. And for the data analysis, the dependent variable is the credit risk, while the independent variables is the internal factors, the external factors, and the internal and external factors. And credit ratio representing credit risk as the dependent variable, while the internal variable, the internal factors include are return on asset, MGT, risky sector loan exposure, debt to asset, natural logarithm asset, liquid ratio, regulatory capital, equity multiplier, and debt to equity, while the external factors include GDP, inflation, yield curve, money supply, and output gap. Descriptive statistics and correlations. Based on the analysis of descriptive statistics, the mean of credit ratio shows 0.0050, while the standard deviation of the credit ratio shows 0.0007. For the analysis of correlations, the variable factors which positively correlated to the credit ratios is the risky sector loan exposure, debt to asset, natural logarithm asset, regulatory capital, money supply, and output gap. And the factors that negatively correlated to the credit ratio is return on asset, MGT, liquid ratio, equity multiplier, GDP, inflation, and yield curve. And in conclusion, it can be said that the output gap, return on asset, and the GDP and the yield curve affect the credit ratio significantly because their p-values is more than 0.05. And for the model summary, I used the model tree for the presentation. Based on the analysis and the table of model summary, R squared shows a value of 0.916, which means that the linear regression is fit into the model. And the Durbin-Watson indicates a value of 2.322, which is near to 2. It shows that the independent variables have no autocorrelation with the sample. For ANOVA, I also used the ANOVA analysis for the model tree to present. Based on the table, ANOVA indicates a p-value of 0.011. It shows that it is not significant because the value is higher than the p-value 0.1. This shows that the regression model cannot significantly predict the outcome variables because the p-value is not significant. And for the coefficient table, it shows that the inflation, which is the external independent variable, will not influence the credit ratio significantly because it indicates a value of 0.11, which is not significant. Based on this study, there are some limitations while doing this study. Bank of Montreal is not appropriate to represent the whole banking industry in Canada. And this study was only focused on one industry, which is banking industry. And limitations of selected variables and time, and a limited amount of information can be collected for this study. So this report cannot be said is perfect because only 5 years of the financial report was used. And in conclusion, I can say that the output gap and the inflation will affect the credit risk of Bank of Montreal the most. And there are some recommendations for Bank of Montreal to overcome the problem. The profitability of the bank should be increased in order to reduce the credit risk. Because based on the analysis, it shows that the ROA return on asset is negatively affect the credit risk significantly. So in order to control the credit risk, the return on asset ROA should be increased, so the profitability of the bank should be increased. So the bank need to take action to increase the profitability. For example, the bank can maintain its sales performance by improving their products and services in order to increase the profitability. Furthermore, the output gap and inflation affect the credit risk the most, so the bank should purchase more long-term assets to ensure that the company is be protected, as the output gap and the inflation will affect the credit risk significantly, and these variable factors are the external factors that we can't predict it because it was hard for a bank to control and prevent the external factors. So Bank of Montreal should take proper action in order to reduce and control the credit risk that will affect the company the most. And that's all for me. Thank you.